Welcome to Plaid Effects and our deep dive session on using cash flow data for lending. I'm John He. I lead go-to-market for Consumer Report, our cash flow insight solution. And I'm joined by my colleague Nikolai Oudalov from our product team. Thank you so much for spending time with us today. Over the next 20 minutes, we'll show you how lenders are using cash flow data to approve more borrowers while managing credit risk. Now, a quick housekeeping note. We'll stick around after this to answer any questions, so please drop them into the chat. Also, this session will be recorded and shared with you. All right, let's get loosened up and kick things off with some trivia. So this one's actually for the credit and history nerds out there. Some context. The first general purpose credit card was issued all the way back in 1958. It was called the Bank AmeriCard. Sure. While department stores had installment plans for things like refrigerators or TVs, this card is often pointed to as the launching point for broad based consumer credit here in the United States. So, with that in mind, here's our trivia question. What city did the Bank AmeriCard debut in? Was it Charlotte, North Carolina, Fresno, California, Yonkers, New York, or St. Louis, Missouri? Take a few moments to type into the chat. Let's give this 10 seconds or so. All right, get those answers in. All right, let's come back together. So the answer is B, in what's famously known as the Fresno Drop, when 60,000 cards were mailed to residents in this small town in Central California. How many folks got that one right? All right, actually seems like a lot of people did. I had a feeling that we'd invite the right crowd for this. If you ever want to learn more, there's an awesome story about this in the book, A Piece of the Action. So go check that out next time you're on a long flight. All right. With that, let's dive in. Starting with a challenge that may sound familiar. Look, if you're on this call, you know that credit scores alone don't tell the full story. Now, don't get us wrong, credit scores, trade line data, they're not going anywhere anytime soon. But there's so much more to someone's finances. First, think about who gets left out. Nearly 100 million adults have less than stellar credit scores or not enough history to generate a score at all. As for the data itself, you need to see not only what they owe through that trade line data, but also what they have in terms of their assets and their income. And on data freshness, you're making do with reported data that may be 30 days old or even longer. In other words, you need to see the full picture on your borrowers with real-time visibility into your applicant's cash flow. You need to know what's their gross income and how stable is that going forward. You need to know what are their savings and how's that changed over time. And you need to know, are there signs of loan stacking here? Or are they actually building financial stability? In today's environment, these insights are absolutely critical for lending. Income sources are more varied and dynamic than ever before. For example, we work with a lender whose median borrower had 4 different income sources over the past 2 years, 5% of those streams coming from gig work, and another 11% of income streams from various government agencies. As incomes get more and more complex, it's harder than ever to assess someone's ability to pay. Also, folks like you who have been in the industry for years and decades tell us that you need more risk separation from credit scores, especially as you move into near prime, subprime, and thin file populations. Now, just a few weeks ago, we announced Consumer Report, a cash flow insights solution offered through Plaid Check, a consumer reporting agency. Through our years working together, you've told us what matters in building this solution. First, for a consumer permission flow, coverage and conversion matter. Drop-offs hurt the application experience and your bottom line. Second, data quality, support on disputes, and a compliant infrastructure matter. You want to make credit decisions with confidence. And third, raw cash flow data, even if it's digitized, is just plain hard to use sometimes. You might be relying on expensive verification sources or even collecting it manually today. Either way, you need a better solution. We heard you loud and clear. With our solution, first, you'll get broad bank account coverage through our CRA. And for conversion, your borrowers will go through the industry's most trusted and recognized account linking experience. And as you've seen from what we just announced earlier today with Layer, we're constantly improving these user experiences, helping you grow conversions. Second, you get this product through Plaid Check so you can use consumer reports from a CRA. Now, this is great for both businesses and consumers. For consumers who apply for a loan where Plaid Check is used, they can request a copy of their consumer report for potential disputes. And for businesses, Plaid Check can be referenced on adverse action notices. And as for capturing permissible purposes, in true Plaid fashion, we've got an API for that too. Finally, you want attributes and scores to turn cash flow data into something you can actually use. Now, these things come together in Consumer Report so you can approve more qualified applicants and manage credit risk all through an FCRA compliant solution. You get up to 2 years of categorized bank transaction data, including account holder identity. You get income insights to assess someone's ability to pay with attributes like gross and forecast income, pay frequency, and a predicted next direct deposit date. You get off-the-shelf cash scores from our partners at Prism to estimate the default risk based on that deposit account data, and we are testing differentiated signals on credit risk made possible only through our network. Signals based on an account's connection activity to other apps in our network, so you can broaden the lens on your borrowers and stay ahead of risk. Now, let's just look at just a few ways that lenders are putting cash flow data to work. First, you can automate income verification. Manual workflows are slow, expensive, and prone to human error. In fact, we just talked to a personal lender whose team was puzzled over why someone with a $2 million salary was applying for their loan. They ran around for hours just to find out, wait, this was an accident. Somewhere along the way, an income number and an account number got switched. Lenders are going digital, and they aren't looking back. Next, you can responsibly expand your borrower pool without taking on much more risk. In most cases, lenders are using cash flow data alongside traditional credit data to get better signals. With second look underwriting, you can run your standard credit policy and then taking your marginal credit score cutoffs or thin file applications, you can use Consumer Report to identify those borrowers with a strong ability to pay. This way, through a continuous application experience, you can swap in or improve loan terms to drive growth in the segments that you may have otherwise declined or just seen drop off from. And finally, you can deepen your customer relationships. Perhaps you're considering a credit line increase for a borrower in good standing. And to do that, you need to see not only if they're paying on time, but also if they're stably employed or staying on top of their other expenses like rent or utilities. More and more lenders are using cash flow data after the loan is originated. And this is made possible through persistent account connections, enabling up-to-date consumer reports. Now, in today's session, we're diving deeper into Consumer Reports' income insights, which makes these use cases possible. And with that, I'll pass it to Nikolai to take us under the hood on our solutions.
Thanks, John. Let's spend a bit more time talking about cash flow data usability. Let's be honest, like John said, raw cash flow data from bank accounts is hard to use. Think about your own cash flow data for a moment. You got debits, credits, peer to peer transactions, refunds, different forms of income, delayed authorizations, and more. Take income as an example. You've got a lot of complications and edge cases to consider. How much to gross up from net income, how to account for taxes, contributions, and deductions, how to identify and separate different income streams which may have irregular frequencies and amounts. How do you determine income stability and when the next paycheck might land? And finally, understanding which employer someone works for. With consumer reports, we're able to take that work off your plate. Starting with raw cash flow data, we clean up what's messy through machine learning and rules based income models. As an output, you get the answers you need to better underwrite and verify your applicants. With income insights, you can verify over a dozen different income category sources. What's a salary versus a retirement benefit versus a military stipend, whether a salary includes a bonus or not, and so on. Our data has tremendous breadth, being powered by use cases across personal loans, credit cards, buy now, pay later, and property management. And from a data source point of view, we offer a full stack solution for virtually universal coverage, from bank account data to document uploads and payroll validation. As a result, our models are trained on over 8 million income related transactions, covering over 700,000 distinct income sources. Lastly, we ask a subset of our borrowers to self identify income streams and give direct feedback on their income data. So we can continuously train our models over time using this feedback loop. Customers using the consumer reports to verify their borrower's income need a high degree of confidence in our attributes. And here are some model performance metrics that give them that confidence. Starting with our ability to detect and categorize income streams, we're able to detect 92% of all income streams with a dollar weighted precision or accuracy rates of 90% on those detected streams. Considering the wide variety of income streams we categorized, customers are able to capture the vast majority of them. Next, you may want to predict someone's ability to pay their ongoing loan obligation. And for this, customers have found two attributes especially useful: our gross income estimate and the next deposit date. For our gross income estimates, we find that our median absolute error is only around $200, with 94% of estimates being within 25% of the ground truth. For the next payment date, we're able to predict this for around 90% of weekly and biweekly income streams, which accounts for the vast majority of income streams. These insights are critical for customers that want to understand the stability of these income streams and how it affects someone's ability to repay over time. And each of these attributes are built from millions of income transactions that we've powered over the years on our platform. Now, transitioning to our partner insights. As we looked at our cash flow underwriting space, it became clear to us that we're at an inflection point. There's a growing ecosystem of analytics providers, and we're excited to unlock partner insights, starting with Prism Data. Lenders and property managers are increasingly looking to alternative credit data providers to grow their business while managing complexity. Through a single integration, contract, and single API call to the consumer reports, customers can get the Prism Cash Score for an off-the-shelf prediction of credit default based on deposit account data. And while we've focused our time on credit risk insights, we know there are more pieces to the puzzle when it comes to your lending operations. That's why, with a single link experience that you're all familiar with, you can also verify the identity of the bank account holder. You can use that account to set up payments on the loan, and you can now be on top of servicing through refresh capabilities that we offer through the consumer reports. And now over to John to wrap things up.
Thanks, Nikolai. Look, we've heard from businesses like yours that you need better options when it comes to using cash flow data. Even those who've been using it for years, whether it's printed pay stubs or digital bank statements, say to us, just give me the answer when it comes to cash flow data. And with Consumer Report, we're doing just that. Lenders from startups to scaled enterprises are already using it to make better credit decisions. So whether you're an existing Plaid customer or new to Plaid entirely, if you think this could work for your business, let's grab time to talk. All right. With that wrapped up, we've got about 15 minutes left, and we're excited to kind of have this discussion. We'll get through as many questions as we can. And if we don't get to all the questions, we'll follow up with folks afterward. All right. It looks like we've got our first question here. Nikolai, I'll pass this one to you first. Does Plaid offer any no-code ways to get off the ground?
Yeah, great question. We have lenders with physical branches and hundreds of loan officers and borrowers coming to branches in person. So if you're light on technical resources to integrate on our APIs, but still want to enable a better experience for your borrowers with the consumer reports, we built something called the credit dashboard for just that reason. So think about it like a user interface to give loan officers the ability to send a link via email directly to borrowers, have them go through the consumer permission flow, and then return the data to populate the insight visualizations in that dashboard that we just discussed. And so all that is very much no code experience that you can deploy with very little resources. All right, so we have a next question coming in. What are some common industries or company types that are using cash flow data? John, you want to take that one?
Sure. I think the really exciting thing is that we're just seeing such a range of companies who want to use alternative data like cash flow to improve their credit decisions. We're working not only with traditional lenders, whether they're banks or non-bank issuers, but this really crosses across product types from unsecured loans to credit cards to auto. There's also a couple more industries I want to call out that we're seeing really exciting innovation from. One is around purchase financing. So whether it's broad based and merchant integrated, like where you might see with a buy now pay later, or specific to a more narrow sector, like when you have financing for home improvement or solar installation, or even home security systems. And one last industry I'll mention here is actually rental property management, which is really exciting. So, income verification to streamline the tenant screening process. It's really helped to dramatically kind of reduce vacancy rates for businesses, but at the same time, expanding access to more people who can show steady cash flow and an ability to make rent. So, we're really excited about that application of Consumer Report. Okay. See a couple more questions here. So I see a question here around what does the consumer dispute process look like when a consumer flags incorrect information on their Plaid check report? Great question. So because the consumer report is offered through Plaid Check, which is a consumer reporting agency, we have a dispute portal that's accessible for consumers to go in and kind of fill out their information. We'll go in and kind of verify that that kind of application was used, and then we will go through kind of like standard processes to ensure that there's kind of like data accuracy in the application process, very similar to what you see in a typical credit bureau report. So we have that available on our site, readily available for consumers who have kind of gone through a loan application flow where Plaid Check is used. Got a question here around, is this applicable for business credit or just consumer? Nikolai, do you want to take this one?
Sure. So the Plaid CRA, can be used for both consumers and small businesses, especially those where the underwriting involves looking at a business owner's cash flows. So even though the data is largely for consumers and trained on data for those consumer permission flows, we see applicability across a wide variety of small businesses and sort of sole proprietors across the board. So depending on the use case, feel free to get in touch with us, and we can definitely do evaluations on what that might look like, what kind of uplift you see for your population. But we've seen good results for that as well. Let's see. Another question here. Do you generate your own credit scores in addition to us getting the FICO scores? John, you want to take that one?
Sure. So As Nikolai mentioned in his section, as part of the consumer report, you can actually get access to an off-the-shelf cash score through our partners at Prism, which is an ability for you to just have a similar to a FICO score, an ability to kind of sort your population in terms of their kind of rank order of default. But instead of it being based on traditional trade line data, it's based on the deposit account data seen through consumer report. So what we've really more seen is kind of our customers using cash flow data from consumer report as well as the insights and scores we talked about today in conjunction with traditional bureau-based scores, whether it's a FICO or Vantage. There's a next question here around kind of seeing the full financial picture of a borrower around whether or not Plaid can aggregate multiple bank accounts that a customer links to do this credit analysis. Nikolai, do you want to take that one?
Of course, yeah. So we have built what we call a multi-item link flow, where essentially we allow users to go through the process of linking multiple financial institutions in one user experience. And so by doing so, we do aggregate across those different bank accounts and provide cash flow analysis across all these accounts. So in the end, you get visualizations and insights returned across the entire picture of a user's financial accounts. And similarly, the cash score is also calculated based on all those accounts that have been connected through this flow. So yes, we provide an aggregated view of those bank accounts linked by a customer.
Okay. All right, seeing a couple more questions streaming here. All right. This is a good one to dive deeper into some of what we discussed earlier, Nikolai, around can you explain more about how machine learning models and rules-based categorization, what role they both play in some of our income insights? How are you able to apply both in a meaningful way?
Yeah, so over time, we of course we began the simpler way possible is introducing some useful heuristics and rules to kick off collection of the data and making insights available to our customers even prior to establishing the CRA. And as we moved into the CRA, we realized that there's a lot of opportunity for us to enhance our rules engines by really building out machine learning features because we have access to so much data. We were starting to see a lot of signal in terms of how we can predict things like income and other account insights over time. And so by leveraging those machine learning models in conjunction with heuristics and rules that we've set as like boundary conditions to be able to really be confident in our results and make sure that the accuracy remains very high because these are important attributes and important data to be returned for actual underwriting decisions. That's how we optimize over time, and we keep updating our models and retraining them as consumer behavior changes, as income patterns change over time. Our pipelines are there to essentially retrain that based on just continuous feedback loops as well as like user inputs to do so.
Seeing a couple questions here, kind of around the different categorization. So, what types of credit sources are you incorporating into the insights? How do you look at self-employment versus gig income cash flows? So, that's a great question. So, the categorizations that we do apply, typically just on both inflows and outflows to the account. Obviously, we're talking about income, we're talking about categorizing inflows, and there's 13 different categories from salary and government and retirement to gig income as well. And actually, gig income is a source that we see increasingly kind of grow in the population, as we mentioned earlier, as people, the way that they kind of earn income is more dynamic than ever before. So we do kind of categorize those differently in our kind of source data.
Yeah, and I see here a question around, have we done any predictive analytics on how well our credit scoring correlates to actual customer defaults or late payments? It's a great question, and our friends at Prism Data have been doing this for years off of a lot of consumer permission data, and they've actually built a lot of case studies and proof points around how their data is very much predictive of defaults, especially like around the 90 days past due is one of the key dependent variables that they predict for, and really they've shown also like significant orthogonality to the traditional credit scores out there. So it's very much, you can see very clearly in the data how complementary it is to using credit scores, especially for some of the things that John earlier described around swapping out some of the swapping in or swapping out some of the population on the edges, right? If you have low credit score folks, you actually might see from the cash flow data that they're more credit worthy than you expected. And similarly, for some folks that might have had very high credit scores, like the cash flow data might show a different picture. And so there's a significant complementarity there that allows you to essentially widen your pool and approval ratings, approval rates for your population.
Yeah, I think Nikolai, it's a great point, and one I think that's worth double clicking on because I think sometimes in this conversation, we'll get customer questions around, hey, like, does cash flow data work better than trade line data, or how should I think about, different aspects of my funnel where I might apply one versus the other in isolation? And I think as we talk with customers, no matter what their industry is, it's really about finding that balance and finding those aspects depending on your credit box and your risk tolerance, your consumer segment, how you think about friction and latency in your experience. Where like that's where we take a very kind of consultative approach with our customers to figure out where cash flow data makes the most sense for them to, whether it's grow their borrowers while maintaining the same loss rates or kind of achieving the same loss rates by having higher approval rates. It really just depends on like where what their business goals are, and by and large it means a complementary kind of use of cash flow and traditional credit, especially as mentioned in those populations where the credit score is not telling the full story of their ability to pay, whether it's a rental obligation or a closed-ended line of credit.
I'll just hear a question about the pricing model. So we price our products per user essentially. So for each user for which we create a consumer report, we have a price for the different modules that we essentially provide. There's the base report that we provide as an endpoint, and then we have the different other modules like income insights, network insights that are priced separately per API call, but it's all based on that single view of a user for the pricing. Let's see some other questions.
Let's see. There's a question here around whether or not, like, what happens in cases where you aren't able to verify someone's income or is not quite correct. Nikolai, would this be a good time to talk about sort of some of the waterfall kind of verification flows that we see some of our customers implement?
Yeah, so we recommend starting off with the bank income flows through the Plaid experience, where essentially we're able to get that open banking data for you and provide the richest set of attributes and insights based off of that for also the longest history that you could get. In cases where there is limited or no bank account connectivity to a particular institution, we have built products to allow you to fall back to either uploading documents. Customers can come in and upload pay stubs or W-2s to prove income. Or if that's not something that they have access to, they can also log into their payroll provider to have that data pulled as well. So that way, we really aim to provide that holistic, 360 view of a user and allow them to have multiple ways of providing that income verification.
Yeah, that's a really common one we get, right? Because when we talk about, to think about like the very outset of our conversation around coverage and who gets left out, the amount of people who don't have credit scores, the vast majority of folks do have bank accounts, but we do have those kind of like fallback flows on doc and payroll in case bank account based verification is not the best way to capture that person. So I think you're right at time. I want to thank everyone for your questions and your deep engagement. and we're excited to talk with you.